The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks. Welcome to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Don't forget, you can listen to us online at TFNN.com. Just click on Tiger TV. Check out the archives of the Diagnostic Trading Hour there on Channel 7. Also, TFNN.mobi, anywhere on your mobile phone, low bandwidth usage. You just want to listen to the show, have something on. You can do that on your phone, on your browser. It'll automatically detect what you're on and get you going. Let's check out where the markets are at right now because we got some movement. We got the S&P is down 22 points. We have the Russell down 16. NASDAQ is currently down 43 with the Dow down 189 points on the day. Looking on over at copper. Copper is currently down 0.5% at the moment. We got gold is down 10 points on the day with silver down 1.3% move. Natural gas up over 2.5% move. Big move there. Right here on natural gas inventory day. We'll take a check and look at that. We talked about it yesterday. Let's go ahead and look at oil. We got oil right now is down 90 cents on the day, a 1% move about. Looking at corn, it's down 2.5%, 12-point move. Soybeans up, down 23 points. And some nice big moves going on in the ags. Euro dollar is currently down 6 pips. Sort of quiet in the FX market comparatively, at least on the settlement comparison. Looking on over to the Aussie dollar down 28. We got the pound dollar up 22. The dollar franc is up only 3. Dollar CAD's down 7. Looking at the U.S. yen, it's down 30. The Aussie yen is down 57. We got the euro yen down 55. Pound yen down 36. And the euro pound is down 9 pips on the day. And I got a request right here in the Tiger Den. Can I pull up the S&P and can I pull up deviation levels? I would love to. Give me 1 second. I'll open it up and we'll check it out. Let's see here. We'll just look at simple 10-minute charts. And let me just pull up deviations. There we go. Okay, so that's the S&P right now. We're at 1.5 deviations on the day on the S&P 500. And we went on down this morning. We were floating at settlement, and we paused right there at the 1, like 1 deviation. See how it broke it, and then just sort of hesitated, went ahead and moved on down the next level. Let's check out what's going on if we look at our volume expectations. And we'll add in, let me add in volume spikes that are happening. Let me also add in expected volume that's taking place. And let's check out what kind of expected range movement we have by hour to fine-tune it a little bit. Let's go in. What does it want me to adjust? Let's see. Parameter period in minutes. Yeah, what's the expected volume down to minutes? So let's take that on over here, and I'll adjust my expected volume. I have it at 4 right now. It has to be at least at the size of the chart. Okay, so got that on in there. It's going to rebuild that for me, and done. All right, so let's look at volume. Let's look at expectations. As far as the day, we moved a little bit further than expected, but as far as the hourly ranges, we're staying right on track, okay? So the movement that's taken place so far, not odd, not abnormal, exactly what we expect to move on each hour. So just you don't expect it to go that much, that fast. Meaning, that much, yes, that fast, yes, all in the same direction, not necessarily. But we go over here, we look at this, and I mean, that was our expected move. We got it. 7.5 points. What do we expect during that hour? And you can see I expect 7.75. We got our 7.75. We go to the next hour, basically the same expectation, a little bit more, 8.25 points. And we barely got above that. We got it like 9.5, like another point on top of it. The current hour expectation was 6. We got to 7.25, so right on track. I mean, within a point. And then, so not the current hour, but the next hour, 11 to 12. Looking at 12 to 1, we had an expectation of 5.5. And let's see here. When it pulled on up right there at the end, we got 5.25 on 5.75, so not bad. You can see volume has definitely broken down, but it's been a great volume morning. Just move. Volume finally lightened up. Okay? So, we don't necessarily have the strength to just keep rocking through it. We did get a volume exceeding expectations bar that just happened 20 minutes ago. Popped up, but I want to say the high was not broken. High and high. So, no, highs were equalized. Therefore, didn't really confirm that the volume was going to turn around the market and go in the other direction. Yeah, we haven't had a single confirmation yet on that. And let's see here. I mean, these are doji bars. They're not really closes. If you look at like the up close bars that are exceeding volume, like all the way down, doji bar. That bar, okay, you could call it an up close. It looks more like a gravestone doji reversal there. But anyways, but looking at it, bar high was not broken. You go over here, okay, definitely a reversal bar with exceeding volume. High was not broken. Pushing being a strong up bar. Either way, high was not broken. Got an up close, high was not broken on the next bar. Got another up close, high was not broken on the up bar. So far yet, we have not had any commitment to the upside. We've definitely slowed down. This actually speed slowdown thing, that's expected. Okay, notice how our expectations were dropping, right? So we started here, first hour, we had an expectation of 7.75, then an expectation of 6, or 8.25, then an expectation of 6 points, then an expectation of 5.75 points. We actually bumped back up, believe it or not, right here in this next hour. The 1 to 2, the expectation right now is 6.25 points. So there is a bit more movement expected right now that's coming on up. And if we get that, we'll move on down this hour. The expectation is the movement to, if we move down, about 1858 is about as low as I'd expect us to go. If the market does decide to surprise us, then about the highest I would expect us to go would be right on up to 1870.5. So that gives you some ranges for the current hour. On into the end of the day. I mean, who knows? He's going to watch it and check it out. But right now, we're pretty flat. As far as deviation levels, we're sitting on the 1.5 deviation line, which is 1862.5. That upper level I just quoted on the range for the hour, that actually takes us back to 1 deviation. So it would not be a big surprise to see us go back up there. A couple of things that we can do to go, okay, where do we expect it to go next? If we get a move, where are we at? Are we at a magnet? We can back up. We can check out our magnets, and we can see what's on the chart that is useful. So on my magnets, I'm going to go over here. I'm going to look at, I want to get really the big move bars. Okay? I mean, like undeniable, like that is the high volume bar. Okay? And usually when I'm doing this, I'm going to go over, and let me see if I can change this up, make it a little bit easier, even than it is right now. And we'll load up, got a little template I made that helps me out called magnet pricing. So we'll load that out just so we can clean the chart up and make it easier to see. And now we'll back up a little bit. Start seeing what sees a high volume range. And get my crosshair back on there. Looks like somewhere around 50,000 is going to be a good, for 10-minute bars, is going to be a pretty good threshold. Right at about 50,000. I'm going to go back. I'm just going to look real quick to see if that gets too many or not, because you don't want too many. So get right about, we'll set it at 5,200 or 52,500. There we go. Just a little above. And that ought to filter out a majority of bars and only show us the highest of high spikes. Okay? Now what I'm going to do that I've done that I just want to focus really on magnet pricing. I'm going to get rid of this right here. I'm going to drop my spikes. I'm even going to get rid of my deviations. All right? So I want to keep it really, really clean to make it a lot easier to see, basically what's happening and where could price go next. All right, so right now I'm looking for bars, and this has just been a really high volume day. Now, you could bump this number up. If you really wanted to bump it up, you could bump it up to like 100, okay, to give you the highest of high volume bars. But look at it right now, like 50,000. Let's see here. What's this bar? That's 48. That's close, but don't count. So right about 50. Yeah, so right here. So we got our 50,000 number. This is a magnet at this point, okay? So that's going to put us right there at 1861. What does that mean? That means the market can oscillate around it over and over and over again, okay, till it finally breaks it with exceeding volume. And then when it does so, like greater volume than what it took when it got to it. And so basically I'm looking at this level right here. And I mean, we had about 85,000 contracts. I want to see this volume be broken on a bar with like 85,000 contracts or more, okay? To really have commitment to leave that zone. Otherwise, it's just going to be pulled back to it again and again and again and again, and we're just going to oscillate on this thing all day. This is a butterfly hour right now, okay? Like, that's a way that you could use it. Volume's dropping below expectations in the last 10 minutes. That last move bar there, it was below expectations. So, a lot happening with magnet pricing that we can use. And I'll make that, maybe I can just do a little, we'll go in and we'll make it a little different color so you can tell the difference. But big high magnet bar right there. As far as what about to the upside? Let's go in. There's a little volume spike to the upside. This would be magnetic price right there. See, we had a nice strong, like it tried to come down, came back up, held right there. We stayed in that area 1, 2, 3, 4, 5, 6, 7. Basically, over an hour, price kept coming right back to that magnet. Okay? So what am I going to expect right now? And I could probably put deviations on and see all sorts of things with this. But I'll probably expect it to come back up there and chill out. May come back down here and chill out. Come back up there and chill out. And that's the story for the day. Okay? That's my expectation. Unless we get some massive breakout in volume. If it does break those levels, now the question is, where is it going to go to next? Stay tuned. We'll talk about that right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right. Welcome back here to the Diagnostic Trading Hour. And we're looking at magnet pricing right now, and we had one of the traders over in the den said, hey, can you pull up deviations on the S&P? So I pulled it up. I was like, all right, let's check it out. All right, we're down at 1.5 deviations. Volume's drying up. Dropping below expectations. Let's do some magnet price analysis, see what we can expect from here. Market was perfect, on track, showing exact high to low expected ranges for every hour. It's been good. But really, what should we expect? And it's not that it's going to stay like right at this. Notice a magnet means like it'll stay around it, okay? Like one thing I won't do, I'll do strangles. I'll make sure I don't do a strangle like right at a magnet because it'll get sucked right back to it. It magnetizes the price, okay? And so for all you traders out there, I mean, it makes a big difference in how you trade. So let's go over here. Boom. Okay, we got a nice move up right there. That's really our next magnet with higher price. These are all big, massive down moves. All right, so if you really want the next up magnet over on the S&P, we're way over here. And notice a magnet bar doesn't have to be a big old bar. It just has to have a big old amount of volume. All right? Now, I like it even better when they're like, 100,000 volume, but 50,000 is, what I need at, the least. And a little trick on the volume too, something to help out on this. Click on your volume, like if you're using Ninja here on the right side, drag it down a little bit. Now when you move, it'll keep that perspective, okay? If it's focused, now all of a sudden volume looks big. But if I put it in focus, then I keep that perspective of what's 50,000, what's 100,000, was it a real big volume bar day, okay? Right over here, there's another one. It's a down close. That's pretty close, but either way, it's still a magnet. So we can go over here. I'd plot that one to the upper one. Give myself a little bit of distance. Okay, cool. There, look at that. There's a magnet that came right back to it later. It's playing right inside that. Finally drops down. Actually does some with some volume. It does break with some volume right there. We could probably dig in between here. Find out where the next magnet was. There we go. So there's a magnet like in between. We go in here. We can look at this. And let's see what happened. Let me change the color of this one so I don't lose perspective on what I'm looking at. It's already been broken, so I don't care about it anymore. Or if I do, I want to keep it as like just a, hey, that's an old magnet. Just be aware of it. But look at that. When it broke down, it's just insane how well this works. Total props to Tommy O'Brien, man. He helped me learn this book, Art of Timing the Trade. So highly recommend Art of Timing the Trade. But anyway, so it drops on down, breaks on through it with expected volume. Look at where it goes next. Look at the very next level. Right there. Right to the magnet. It hangs out there actually all morning until market opens up, and then it breaks through with volume. Okay, but notice we went right to that old magnet. Now, that was the magnet until this morning when we broke through it, okay? And so we go back, we can go get, well, where's the next magnet? Let's see if we can find the next magnet over here. Okay, that's where that one came from. By the way, I like to draw vertical lines if I remember to do it. It lets me know, like, where did I get that magnet from? Okay, so I'm like, where did that line come from? So I put it right there. And, got that one twice, actually, didn't we? So we got that one right there, the exact same one. And then right over here, here's that magnet right. Okay. So it's about doing that. It helps you. And if you're trying to figure out which one it is, you can also stick a dot on there because you start getting them lined up. And you're like, okay, well, I see a bunch of lines. Which one am I pointing to? I'll do that. And if it's basically, I'm like, okay, this magnet at this point, that's where I came up with it. It helps a lot for, you know, memory when you're looking back at that chart and you're trying to decide, because maybe, like, is that an old line? Is it busted through? Is it a new one? And I can track back and figure it out doing that. All right, so we go back a little bit further, and see, that's a newer magnet, but let's just keep going back. Let's see what we find right there. So, like, here's an old one. Okay. Now, it's not old anymore because it's old now. It's old because of this morning. But right there at the low, that high magnet, and then we actually, we had a couple of them in process. And if I go back over and I fast forward, look at what we came down to. Right down that old magnet, right when it stopped and oscillated. Create a little new magnet, like right down below there. Look at that. Right to the magnets every single time. All right, we'll figure out where it's going to go on the downside next. Stay tuned right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So we've defined and we've seen where the magnet prices have worked awesome over and over again and pulled right back down. We got new and old magnets, these little peach lines, I guess, at the moment or whatever, are old. And those ugly pink ones are new. Moving it on down and checking things out. Let's see where to the downside, okay? So right now, let's go on back and go. If it does break down with volume, where are we going next? Because my next two targets right now, if you don't know what they are, right now 1867 on the upside. We're basically down at the low target of 1861. I expect it to bounce in between these areas and oscillate at these lines, but not do much of anything unless it is able to break through and close below them with significant volume, which would be at least 50,000 contracts, okay? Like at a minimum, 50,000 contracts, closing above or below the lines at this point. So, and then if it does bust on up, then I can see it popping on up to 1885, okay? Like literally all the way back up, doing a full move right back on up there. What about if it busts down? Because there's no magnets. I mean, there's an old magnet like 1880, so you can be aware of that one, I guess. It's an old magnet. but there was no volume at the old magnet. See, the last time it came right down to it, it oscillated and just pop right through it. So it broke it and ran on down. So I guess you could be aware that old magnet 1880 and 1885 as being like the sort of the main target. But, your first target, second target, if it pops up. Solid 12 to 15 points. So now let's look below 1859 over here. We're going to scroll back a little bit because the market has just been running on up. Okay, so we got this one. I want to say that's where we're at now. We'll check this out. There we go. Boom. Strong, solid move down, like double, like bam, 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 bam. Okay, so that's going to take us down to the next magnet low. And definitely you're going to want to use color coding as you start getting into this. I'm sort of going a little fast here in the radio show. But, whatever colors you want to use, just, make sure you understand whatever method it is you're using. And, like red, like there's my next low, okay, that I'm looking at. The pink lines could be the ones that I think it's going to oscillate in between right now. That's what it's doing. My next upper main target, I could make that green. Okay, that's where I think it's going to next. And I could leave the, the peach ones in there as being, hey, these are probably going to be little bitty resistance points along the way. All right, so that gives me a decent move, 1867 down to 1855. What about below that? Let's find one more down. Be ready for it, okay? And see what we can come up with. We really got to go back. By the way, check this out. These are lines we just drew, right? These like red ones and green ones and peach ones and pink ones. And I want you to watch something. Okay, we drew these from like the recent price action, okay? Meaning these became new magnets. But watch as we go back. Oh, yeah, I didn't mark that one. Remember I said I want to mark it. Tag it. Okay? So that way I know where I drew that line from. So watch as we go back. Look at what's happening. Check out how these lines right here are becoming like perfect support resistance lines. Now this is going backwards, but we drew these for going forwards, and they've worked going forwards. These price levels are not just magnets from that volume. Like, they are places where people are placing orders, okay, over extended periods of time. And often what will happen is I will see that I'll end up having a magnet, and I'll go back and look, and I'm like, oh, I would have set that exact same magnet right there 3 weeks ago. Okay, the one that we just set today, that's not 3 weeks ago, but I mean 2 weeks ago, or on the 5th, exact same magnet. The one that we just set in the last 15 minutes already existed. So it's pretty cool that it's sort of reconfirmed, okay? So that maybe, like, if you had that line still sitting there, like as a peach line or whatever, okay? You can turn that one back into, a pink one. Like, hey, we just reconfirmed this as a magnet, okay? It's not a target because we're sitting at it. Now, if I fall back down, we fly down, I'm going to make that line green because I think I'll come back to it. But, so we got that line right there. We keep going. Keep going. All right, here we go. Got another one. That's what I wanted. And you can go through it. I mean, you don't want to draw 1,000 of these lines. That's why you really got to start at the beginning, and you got to find stuff higher and lower. Okay, if you go back a month and go forward, you'll have so many lines you won't know what to do with it. So you got to start like right now today and go backwards. Okay, so it has to always be going backwards. If you try to go, meaning like start today and do rewind, don't do rewind and go forwards because you'll have all these lines and it'll just get really, really messy. Yeah, see that like right there? Going. And let's see. It's amazing how you just see these same levels again and again and again right there. Exact same magnet. Still looking. And I didn't make that red. Yep. Probably didn't tag it either. So I'm going faster for the show. Right on down here. There we go. Now we need to bring the zoom up. There we go. Now we got some movement. All right, well, that was one that got broken right there when it busted up. What about to the downside? Because we got so many moves down. Now, there's my last down closed bar that had greater than 50,000 contracts. Okay? There's a big old gap there, isn't there? Look at that. That's just insanely huge. And notice how it had actually, when it busted back up, it had to exceed that and close above it to move. All right, so let's put that on there. Let's see if there's anything, if I missed anything. Is there anything in between there that I missed along the way? That gives us a pretty nice range, at least at this point, that we can take advantage of. And go over. Yeah, same magnet. So I'm just trying to shrink them down. Yeah, one more down there. There we go. That's what I wanted to see. I knew it was a magnet too, right there. Right, look at that. See that right there? Boom, popped, and then came right back down to it, and magnet again. But going forward, we haven't dropped back down. We moved on up. Moved up there. Hit those magnets. Bounced. There's nothing in between. There literally is nothing. So this is that's a pretty significant level to be aware of, because there's no orders there at all. There's been no commitment of traders at that point. And the point I'm talking about is right over here. If we can break below 1845 with volume, I mean, we're good 15 points away right now. If we can break below that with volume, I mean, we're talking about a drop down to 1815. Fast. Same day. Okay? So, what I'd like to see, and this is what I'm warning, okay, is when it comes down below this with some volume. And so you see, like, price comes down, let's say volume's high. And then you'll see no volume at the level. But what's really beautiful is when you see a lot of volume, but the bar can't close above it. Okay? So you get like this massive volume bar way down here. The bar shoots up. But the problem is the close is below it. That right there, that, let's go make a few thousand, $3,000, $4,000, $5,000, $10,000 day. Okay? That's the big days. So when you see it bust, like really hit a magnet with a lot of volume, but it can't close above it, and then you start to get that turnaround, that's when you shoot to the next magnet. I mean, it's a slingshot. And, I mean, it's like it's pulling back. I mean, there's all this force on it with that volume. And it's like, poof. And then it launches it right on down. And it's the volume. It's like, I mean, all that, they're eating everything up and they're done. And they're like, all right, next target, where are the orders? Orders are going to be sitting over next level. Where'd they sit at last time? They said at 1815. That's where we're going next. So that's literally how you can target that going backwards. And just checking out your magnet prices, but using that for predicting where price is going to go next. And I can see right here, hit it, see that strength right there again? See it the same day right there again? And as big as that move sounds, look at what it did when it popped up from 1815 to 1845. Okay, we got that in 2 hours. Bam. We're going to lose it just as fast. Okay? And people are going to be all shocked. How'd that happen? Where'd that come from? Okay, look at that. 1845. Again, right there. We got the exact same I mean, I'm just going back day. I'm just looking at days on the S&P. Scrolling back to find that price level. To see if we just hit it again. Right there. Look at that. Look at this. We're just sitting at it. Let's back it down. Check that out. There are orders that, I mean, people like to place orders for whatever reason. They love 1815. All right? people, algos, I don't know what it is. Look at that. It's sitting there for hours overnight. It's going back. I mean, it's on that level. So once it finally got to it, there's history there. There's psychology. We can talk about all sorts of Monday morning quarterback reasons, footprints, emotional damage. Whatever happened there to somebody. But, right there again. We're watching this line. If you don't know, we're watching this 1815 line right here. That's the last 4 months. Tell me that's not a magnet, Market's just on it. Finally, bust up. Goes back down to it. Bust on up. Where are we going next? Okay? I can't give you a better magnet than that right there. We're sitting at this low right now. We're not really busting volume at the moment to give me just a massive, we're going to go short now. Now we're just going to drop like a rock. Not seeing anything to confirm that idea. Let's go in. Let's dive in a little bit deeper again. Let's add back on. This is where we're going to put the deviations back up. Okay, so we're going to put my ranges back on. The hour. And see what we're doing, where we're going. Let me get rid of these little black arrows. Don't need those. All right, so let's back that down. Right there, so we can still see our volume. And now let's move it on up. Whoops, shrunk it. All right, there we go. And bring it on over to the end of the chart. Okay, and then I want to move it up here so I can see what kind of expectation I have. We got that right there. Whoops. All right. So my expected movement for the hour, we may bust through this. Or are we going to fly through it? See, that's the question, right? Or are we just going to be magnetized right back to it? What's the expected move on the hour? Right now, our expected move is down to about 1858, 1857.75, 1858. So now if we start exceeding volume, if we start getting some big moves on volume, and we could go a big move right now, if we exceeded volume, my expectation would be down to 1854. Okay? If we stay under expectations on volume, then I expect to go down to about 1858 and then just oscillate from there. Okay? I'm not talking about this hour. So it may oscillate from there, and then the next hour, like you can already see the range on the next hour, when it wraps up here, which is 12 minutes, actually does set us right at the next magnet of 1855 if the market does continue to decline today. So at this point, 1855 is a realistic point, but we're still sitting right on top of the magnet, 1860. Stay there. I'll be right back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, coming back here to the Diagnostic Trading Hour. And so we're watching this one here. We're looking on down. We got the upside magnet price. We got the downside magnet price. Put the all the pieces sort of together here for you. So hopefully you're able to have that trading plan. But like I said, it's got to break away from this magnet with volume. It was trying. It was pushing. We actually had a bar right there. Like let's zoom in. Let's get right in there on the bar. The hour. I mean, we're really gonna zoom. All right, then let's make it readable. Stretch it out even. Right here. There we go. That's a little more legible. So right there, I mean, we're basically closing like right at the magnet. Our volume is below expectations, so it did not exceed expectations. So I don't plan. I mean, it's not breaking away. You know, it's caught in like one of those little force-filled beams, tractor beams, whatever you call them, and it cannot break out. So, but if it does, we know where it's going. Up, we know where it's going. Down, and until then, we expect it to stay in between, probably for a good chunk, if not all day, 1868 and 1861. So the only way it's breaking out of those if it has some force. to be able to, because I mean, the thing is, all the orders got eaten up. Okay, like they took it out. All the orders, so there's not like a whole lot of orders just sitting there. There's not a commitment level, or there hasn't been recently a commitment level of orders to sell below that, orders to buy above that magnet. So when it gets down there, nobody want to sell lower. Okay, let's just drive it back up and get up there. Nobody's wanting to buy higher. All right, let's just drive it back down. I mean, it's a floor trader's like dream. Okay, they love this. All right, because they come in, they just grab them, sell them, grab them, sell them. I mean, like when it starts going nuts, that's when they need to back off, because they're usually either making a lot or scared out of their mind or just lost everything. So come in, they just fill the markets, make the markets back and forth, and but when there's no commitment left, it's just going to oscillate in between those points, because you have traders coming in, they're trying to sell, but they can't get anything sold. And then buy. It's like, okay, I'll buy it, and it goes up, and then all of a sudden nobody will buy any higher, and it stops, and it starts going back against them. They'll sell, and it's just a little repetitive cycle. When you see it, then you go, how can I take advantage of it, right? So I could buy an 1850.75 strike right now, going right into the close on the S&P 500, and I could enjoy a nice little expiration premium collection trade. That's a way to take advantage of it. And just, simplest simplicity. So right there, I mean, that literally would be like it comes down here, doesn't break with volume because back up. As soon as it breaks that high, I mean, you have a nice strike right there. So that's like, how far away is that? That's like not even, a couple points, right? So simple, easy trade. Now, I wouldn't take the higher one because you don't know how far up it's going to go in the next like 5-10 minutes. But in the money one, easy expiration premium collection. The higher one could be an expiration trend collection trade. You go in there for, maybe buy the thing for $10, and if it pops up for you, and there's still a quote on it, and I can go over, I can look at them, we can see what's available. I mean, they're probably going to stop quoting here if they haven't already, but they're still quoting some. So, anyways, check it out. I hope you're picking this up, picking up what we're putting down. So, y'all have a great day, and I will see you tomorrow on the Bull Bear Binary and the morning and on the Diagnostic Trading Hour. Thank you. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.